In this video, we're going to talk about Lucid Motors, trading under the symbol CCIV. CCIV is a special purpose acquisition company that was served as a vehicle to help getting Lucid Motors going public. The reverse merger between the two entities has made headlines across the financial world. So far, the stock has either brought wonders and fortunes or a lot of bitterness to those who decided to trust their money within this company. From $10, it rose to a historical high of 64 before correcting back as much as 70% of the gain. Currently, as we speak, there is no indication where the price correction may actually take us, since the price movement doesn't indicate any significant support as far as the price action is concerned. 2020 and 2021 will be crucial years for Lucid Air because it'll have to prove itself to the investors that it is the golden goose the market thought it is. In terms of the operations, Lucid Motors is building facilities and signing up strategic partnerships with suppliers and partners to help it manufacturing the pieces it needs. There is no reason for us to believe that Lucid isn't an authentic and honest company, so I wouldn't look for the causes of the lackluster stock performance there. I think that the stock market reception to post-merger Lucid stock is due to the initial hype, the change in the market trends, and the challenges that all EV manufacturers must face. The possibility of becoming a niche product for the rich and famous, difficult to scale up, and the scarcity of the microchips. In the case of Lucid, the burst of the hype bubble didn't just break the trend for this one company. It was also the beginning of a massive sell-off of the entire growth stock sector. This change in the market also triggered a change on the market's attitude towards EV, SPACs, and startups. Investors became more cautious and cynical and stopped pouring capital in those types of company. Of course, Lucid also faces the same issues all EV manufacturers may eventually face. For example, it may not be able to compete against Tesla or traditional manufacturers in scale because it aims at the high-end segment and doesn't have the capital required to increase the manufacturing capacity the same way as, say, Toyota, Ford, or Tesla do. It may also be constrained by a lack of microchips, which caused volume issues to NIO. But despite everything that is going against Lucid at the moment, I would say that the one thing going for us is that the fundamentals of the company at the end of the day didn't change that much from the days of the hype to the present day. Every time that the stock goes down, it's an opportunity for us to buy even more. Because deep down, I think that Lucid is going to be one of the companies that will end up coming ahead when all the dust is settled. Future catalysts would be the production volumes, delivery numbers, and other data that are grounded in reality. In the meantime, the stock price decline can be a good news for those who don't have a huge amount of CCIV stocks in their portfolio already. If you have a lot of CCIV stocks in your portfolio, I would highly suggest to start selling some call options to collect premiums and to hedge your risks. Make sure that they're out of money, and then things should be fine. The reason I believe that this can be a lucrative and smart move is because CCIV shares will probably not get back up in the short term, at least not before late 2021. In the meantime, it would be a good opportunity to average down the position's cost. Thanks for watching. If you like my content, please like, comment, and subscribe to my channel.